When gold is trading beyond the historical levels, it is very complicated for the newbie traders to identify the next strong resistances. In this video, I will teach you the only 3 technical analysis tools that will help you to identify the next key resistances and predict future correctional movements. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. The first technical analysis tool that will help you to identify the next potentially strong resistance is the trend line that is based on previous highs. We will look for a significant trend line on gold on a daily time frame, and our task will be to identify the trend line that was respected by the market at least 3 times in a row in the past. It means that 3 significant bearish movements should have initiated from that in the past. For that reason, that trend line based on 2 previous highs is not sufficient for us. That trend line is not valid because it was respected just 2 times in the past and only 2 bearish impulses initiated from that. And what we do, we zoom out the chart and we look for a trend line that meets our criteria. We analyze the historic highs and we look for such a trend line. Again, that trend line here is not valid. It is respected just 2 times. We zoom out the chart more and here we have one more significant high. Again, we draw the trend line and again that trend line is not valid. Learn technical analysis, price action patterns, candlestick patterns, support and resistance levels with my premium course. For more info, check the link in the description below. We zoom out the chart more and here we have one more significant high. We draw the trend line and finally we find the valid trend line. The trend line that was respected by the market 3 times in a row in the past. You can see that 3 times in a row from that trend line the market dropped sharply. So that trend line is valid and that trend line will be our next important resistance on gold. And you can see that when the price approached that trend line, we already saw a nice rejection from that trend line. So that will be our next important resistance on gold beyond the historical key levels. The second technical analysis tool is the psychological level. These levels are based on round whole numbers. When you're looking for a psychological level based on the round number, analyze the price levels on the right and identify the price level that is based on whole number. Our closest psychological level here is 2500 level. That is a very significant psychological level, and the area based on that level will be the next potentially strong resistance for us. And remember that the levels like 2200, 2300 are not that significant. The most significant psychological levels are 2500, 3000 level, 2000 level. This will be the significant psychological levels based on the round numbers, and the closest one is here. The third technical analysis tool for the identification of the next strong resistances is the Fibonacci extension tool and Fibonacci confluence. In order to identify the next potentially strong resistances with Fibonacci extension, the first thing that you should do, you should analyze the impulse lags. You should identify at least 3 significant impulse lags. Our first impulse lag is right here. It is a strong directional movement. It is a very strong bullish impulse, and that can be applied for the Fibonacci analysis. Our second bullish impulse is right here. Again, it is a very strong bullish wave, and we can use that for the Fibonacci extension analysis. And our third impulse is here, a very strong bullish rally from that structural low. Once you identified the impulses, once you spotted 3 impulses, you should draw the Fibonacci extension levels based on all these impulses. Let's take our smallest impulse. Let's take the Fibonacci extension and we draw the extension strictly from the low of the impulse to the high of the impulse. And here let me show you which Fibonacci levels you should look for. You should look for 1272, 1414 and 1618. This will be the most significant Fibonacci extension levels. Then you do the same thing with the second impulse. Our second impulse is right here, and again from low to high we draw the Fibonacci extension levels, and then we take our third impulse and we draw the Fibonacci extension levels again from low to high of the impulse. And with the Fibonacci analysis, what you should look for the confluence. You should look for the area or the level where all the extension levels match, where 3 extension levels match. And here, let me show you the example of the confluence zone. Our closest confluence zone is right here. You can see that here we have a perfect confluence of 1618, 1272, and 1414 extension levels of different impulses. That will be our next potentially strong resistance with Fibonacci extension analysis. And here are our next 3 potentially strong resistances on gold. The first resistance is based on this rising trend line, the second resistance is based on the psychological level, and the third resistance is based on Fibonacci extension confluence zone. Remember that there is no 100% guarantee that all the resistances that we spotted will be respected by the market. For that reason, you should strictly analyze the price action after the test of one of these resistances and look for confirmation before you open a short position. And look how nicely gold respected the trend line that we spotted earlier. You can see that after the test of that trend line, the market was nicely rejected and then we started to fall rapidly. And here are the intraday confirmations that you could spot after the test of the trend line. On a 4-hour time frame, the first strong bearish confirmation was the formation of a double top pattern. You can see that after the test of the trend line, the price formed a double top. The price violated the neckline of the pattern with the high momentum bearish candle. So here we got a very strong confirmation on the 4-hour. Then we got one more confirmation on the 4-hour time frame. You can see that over here we got the trend line. You can see that the market was nicely respecting this rising trend line, and that trend line was broken to the downside as well. But we got more bearish confirmations on an hourly time frame. If we open an hourly time frame, here in an hourly time frame, we can spot, let me just clean the chart so you could better see what is spotted here. You can see that here we got a very nice bearish flag. You can see that after the breakout of the neckline of a double top formation here, the market started to recover and we formed a bearish flag. And you can see that the breakout of the support of the flag triggered a strong bearish confirmation. So once you spotted a strong resistance before you sell, analyze the reaction of the price to that on the 4-hour, on 1-hour time frames, and look for the signs of strength of the sellers. Look for the bearish patterns before you open your trading position. It will increase the probabilities that you will be right in your predictions. Alternatively, remember that these resistances can be applied as the targets for your trades. Let me know, traders, in the comment section if you have any questions. Also, traders, if you want to learn how to trade gold, do not forget to check my premium course. For more info, check the link in the description below. Also, traders, do not forget to watch my other videos.